Hello YouTube, welcome to Trade Journal episode 11. Today we opened in the red from the AMD long strangle play or strategy on the earnings play we were trying to make. So price did move in our favor, yeah, actually it did. Uh, but unfortunately, uh, I did not buy the correct deltas. I bought or the correct contracts. I bought contracts with deltas that were in favor of long calls more rather than the long puts. So even though the puts did come up in value, they did not um, profit more than the cost basis for the call side. Now, if I had held, the contracts until close today, maybe, uh, maybe even until 6:40 in the morning. Maybe then I would have made some profit, but I expected to just close the contracts at open. I mean, this move already alone, if I didn't profit there, I was not gonna make any profit. Especially if it came back up, I was definitely not gonna make any profit at all, because the gains from the puts would have just decayed, and then I wouldn't have made any gains from the call until I had reversed all the way back up. So I decided I used like a 15 to 20% trailing stop loss, and I got stopped out. Don't remember when exactly, but it was very fast. Excuse me, it was very fast in the morning, and I was just doing it mentally, and I saw that price had come down like about $45 from the profit from the high of the profit, so I just closed the contract. So we're doing another play. We're on meta right now. We're trying to play earnings meta or meta earnings, and this is the position we're in right now. So we're in a 460 put, December 20th, and a 785 call, same December 20th. So initially, when I was in these contracts or when I entered this strangle, I had bought one on both sides, and then I had bought added another two because I wanted to risk a little more, and then I decided, you know what, I'm just gonna go ahead and try to risk 5% of my account. I don't see why not. Um, I think the risk to reward is definitely worth it. So I went ahead and I tried buying six, ended up buying six puts, and I was only able to buy one more call. So what I ended up doing is just end up selling the two puts. Um, I think even if because the deltas for these contracts are so low, or were so low upon entry, I think it still would have been fine if I had bought, like if I was like in six puts and in four calls, I think it still would have been fine. Or if I was in like six calls and four puts, I think that still would have been fine because the deltas were so low. As you can see, like this one is already in profit, $99, up 10%. When I had bought this, the deltas were under five, I believe. And the same on this side, these are also on profit. The delta was, there you go. So the delta here is at 0.0495. So I wanted to go under five because any drastic price change um, with this delta would mean that, let's say it goes upwards, this is going to go up a bunch because gamma is going to keep adding to it. And since Meta has such a huge ATR. For every $1 it moves, let's just say in the direction for the call, that gamma is just going to add up onto the delta, and it's going to continue happening. And the closer to the price, the closer the price gets uh, to the striking price, the higher the gamma and the higher the delta, and they just continue. They just add up on top of each other. It's essentially exponential. And then let's just say. And while that's happening, kind of like the inverse is happening on the puts. So if price is going down, the delta is going down, the gamma is going down. So um, I'm gonna have a bunch of extrinsic value, um, but the gamma and the deltas they'll go all the way down. They'll come down a lot, but I'm not gonna be losing a whole bunch. Um, yeah, and you'll see. It's kind of hard to explain it because it's you have to have the experience for it if you don't know what I'm talking about. But If you're watching my videos, it's possible you probably know how these options contracts work. But we'll go over here and we'll look at the the profit to loss ratio. So what I was going to do is I was going to absolutely close the contracts upon market open. And then I saw that because I ended up adding into the positions, I added into the positions in a way where I got lucky, so that's cool. Where by tomorrow expiration, at worst, I'm going to be down $3 at worst. And then so that just means that let's just say I don't have any big profits or price hasn't moved drastically in a direction. Um, I can just wait until the end of the day because after earnings, if I'm thinking, I've noticed that, and this is like my own discretion, is that I've noticed that price will either gap up, and if it doesn't, or if it does, doesn't matter, it can still continue a crazy amount. So what I'm going to do is if it gaps up a lot, I will likely close 3 of the contracts on both sides and just kind of just leave some runners. And then that way, like if price doesn't go my direction, then I just, I've already taken profits on the first 3 contracts. So So yeah, let's go ahead and take a look right now. So Meta right now is at 573. At one point it came down to 554.85. So this is for fun. Let's just go ahead and look what the profit would have been. Let's just say price just ends up coming back down to 554.85. By market open, I'm gonna be up somewhere between $229 and $261. So that's pretty good. It's a pretty good amount. Right now, since price is not there, let's just say price holds to 573 till market open. 573. I mean, I'm still gonna be up. Worst case scenario, like $58. So that's still pretty good. That's still a pretty good amount of money. I mean, I am up 139. So I'm gonna lose some profits, but I mean, it's okay overall. I'm honestly thinking that price is going to continue to move drastically because for the past 3 earnings on Meta, um, on average, price has gapped at 60.47 points. So at market close, just go ahead and mark the close of the market, which is 591.55. So we just go ahead and open up the calculator here, right? And we just add that value, the 60.47, to the close, or we subtract, right? 591.55 plus 60.47. It would be 652.02, right? So we can just mark that level right there. Or actually, I'll just set an alert for now. I didn't mean to do that, but that's what ended up happening. Let's get that closing price again. And now let's sell, or minus, subtract 60.47, that's 531. I say it was 531.08. Right, so on average, that's kind of the price movement that we should expect. Yeah. So it could be less, right? So I'm expecting worst case scenario around somewhere between 620, 640, somewhere around 650, 540. It's worst case scenario. Best case scenario would be, or average case, just a medium statistical would be, those alerts, and the best case scenario would be 680 and above and 500 and below. So let's just go ahead and take a look at those. Again, just for fun. So I said best case scenario 680 and above. All right, by tomorrow that's $850 by close. Okay, so that's pretty good. 680 and above. And 500 and below. Yeah, it'd be about $1,000. So yeah, it's the risk reward is definitely there. Okay, this is why I'm risking it. This is why I'm in this trade. And then again, if it's nowhere near that, let's just say price is at 583, maybe 572. Definitely at 616. Definitely at 605. Maybe at 616. I'll just hold until the close of the day, and I might even hold until the next day, because the risk to reward is still there. Price can still move and still make a bunch of money. So those are the trades that we're in. Also, I left these AMD contracts, and these were the ones that wider nets. These were the contracts that were zero point 0.4 delta. Oh, this one wasn't. This is the one that when the market opened today, this was the price of it. But let's just go ahead and look at the AMD put side, so you know how much I profited off the put. Went from, see, I sold it at 239. I bought it for 117. So it's a little more than 100% profit. But again, I didn't cover the losses here on the AMD on the call side. If I click on it, will it show us the deltas? The history of the deltas? It does not. All right, that's fine. So, yeah, that covers our trades from yesterday, and our trades going to tomorrow. So thanks for watching the video. Stick around or stay tuned for tomorrow's video and our update on the Meta earnings play.